JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 9th of March 2020. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, a few of the setups, and of course, yeah, have just a nice technical view of everything what's happening. I mean, there's a lot of things happening, but as always, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump in, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there, guys. So now then, let's jump into the charts. Now, of course, the main news today is oil. Saudi Arabia's price cut with an increased output. Now this of course shook the market this morning, and looking at the first instrument here, the Footsie, and looking at this daily chart, we can see that yes, on Friday the Footsie managed to close nicely around this area here, around the 6,460 territory, which was the lowest point of February. So basically kind of ended the week bang on there, on that level. But of course, the news that came out this morning, as I said, shook the market. And looking at the price right now on the cash index on Footsie 100, we can see that the price is already around the 6,023 zone. So basically, if we scroll back here in the daily chart, you can see that the price is around here. It's not far from these lows, the June lows of 2016, guys. So basically, for now, of course, we'll be very careful and cautious here. Don't get me wrong, it may continue drifting further south, but given the fact that we already had a decent slide, we may maybe get a nice rebound, maybe, and let me just actually, for this one, probably jump into a weekly chart, because it's getting ridiculous here already. Now, looking at this picture, this is a weekly chart. So basically, we are currently trading on the cash index roughly below this, the low here of May 2016, and that's roughly around the 6,053 territory. So we're trading slightly below that. In a way, this could continue drifting further south, but as I said, given the fact that we already are quite overextended here to the downside, we may get a small maybe recovery, maybe a push back to the upside here a little bit. At some point, we would be really nice to see maybe a recovery back towards these levels here. But to be honest, don't get me wrong, for now it's really difficult to kind of predict from where exactly will be that nice good area of support from which the index could reverse, maybe for a bit of a correction to the upside. For now, it's a little bit difficult. So for now, what we're going to do here is, of course, we are going to continue targeting that psychological 6,000 level. And let me just jump back into a daily chart on this one. So so yes, we will continue targeting that 6,000 mark, because we are not far from there. And but to be honest, a better area of support for now at this point in time it seems to be this one right here, the lowest point of June of 2016, and that's roughly around the 5,788 zone. So basically, like I said, we might get a bit of a correction here to the upside, but the bulls should not get their hopes up yet. Let's see how this is going to play out, but for now everything's kind of looking not good here for the indices in general. But again, don't get me wrong, if we start suddenly pushing back above the 6,462 zone here, then yes, this is where it could become a little bit interesting for the buyer. So in a way, a push back above the low of February near the 6,460 territory could do the trick here for more buyers. But again guys, for now it's a little bit tricky with that upside. So any kind of small little pullback here to the upside could be seen as a temporary correction. Now then, gold, very quickly on this. So this morning gold popped higher, managed to overshoot the psychological 1700 level, and actually let me just clear the chart here a little bit because too many lines. Now it managed to reach this area here around the 1703 territory, from which you can see that the commodity kind of started retracing back down. Don't get me wrong, of course, yes, we are quite overstretched here, but to be honest, I mean, if the situation, if the sentiment, the bearish sentiment remains in the market, I mean, this could continue drifting lower. We'll keep an eye on this little area of support here around the 1652 territory, 52-53 zone, because if this continues to hold, for example, that's by the way the high of the 4th of March. If it holds, we could see another round of buying. For those who are more on the cautious side, you could just of course wait for a push above the 1703 territory and then aim for higher levels, because this way the commodity would confirm a forthcoming higher high, and then yep, we could start aiming for levels we saw in 2013 and 12. So I mean, we are there already, but good potential targets could be seen around here. Let me just actually put this one quickly on the chart. So basically the highest point of December near the 1723 level could be a nice target right now if we get a push above that 1703 level. Of course, for now, given the situation here, we may see a bit of a correction here, maybe a little bit of a deeper correction. But if it stays above this 1652 territory, then yes, we could see another round of buying. So something basically like this could be possible. So keep your eyes on this, guys. Of course, if it starts dropping lower, now don't get me wrong, that doesn't mean that from here we will start drifting only south, but still what we're going to do here is, if we're going to see a drop below the 1635 or the 1636 territory here, then yes, we will aim for a bit of downside, but we'll keep an eye on this little upside support line. And let me just quickly put this one on the chart. So this one's taken from the low of the 21st of May, and yep, in a way, if we do see a drop below the 1636-35 zone, then yes, we will aim for a bit of a larger, a deeper correction to the downside up until this upside support line. For now, guys, we are more positive than negative. So of course we'll keep an eye on the 1652-53 territory, but as well we'll keep an eye on this morning's high around the 1703. If that gets broken, yep, this confirms a forthcoming higher high. WTI oil, so the main culprit for the whole market disbalance, let's call it that way. So basically, actually, let me just remove all these lines because they keep becoming irrelevant. So as you can see, the commodity drifted lower, and WTI oil found support this morning near this area here, near the 27.40 mark. So now we're seeing a bit of a rebound here back to the psychological 30 zone. Of course, from the technical side, overall we are still trading below this downside resistance line taken from the high of the 8th of January, or in other words, the highest point of this year. And in a way, don't get me wrong, we may get a bit of a correction at some point here, but let's keep an eye on some key important levels. And let me just show you those quickly. I need to go back into history, and I need to go back into 2016, guys. So the lowest point of 2016, around the 2608 zone, roughly around there. That's our main target right now, because yes, we are seeing a nice recovery here at the moment, but to be honest, if the selling continues, if the sentiment remains here, then yes, we may end up testing this this lowest point of 2016 at 2608. Don't get me wrong, I mean, we could start considering even lower areas, but for now that's going to be our target. We'll see how it plays around there. At some point, of course, if it starts climbing back up here and pushes above, let me just put this one on the chart very quickly, and if it pushes above this little territory here, let me just capture this one. It's very tight and very we need to be very careful. There we go. So 34.80, that's the high here, the high of the 27th of January, if I'm not mistaken. Let me just quickly sorry, the 34.80 was the high of there we go. There we go, the 28th of January 2016. So basically, if we get a nice good push back above this barrier, then yes, we will aim for a larger correction here to the upside. As you can see, we do have a lot of space here for a bit of correction up until this downside line. So in a way, some levels to consider are the lowest point of December 2018, which is around the 42.40 mark, or even we could climb further north, but to be honest, this is a very tricky level. That's the lowest point of February, but we'll consider the lowest point of February as the potential level to after which a break of after break of which we could aim for higher levels. There we go, managed to squeeze this one out. So of course, don't get me wrong, to get a little bit more comfortable with higher levels, we would need to see a break of this downside line, a push above the 48.6465 territory, and then we would aim for higher levels. But let's keep it short and simple for now. If we get a push back above the 34.80 territory, then yes, we will aim for a larger correction to the upside. For now, anything up until here could still be seen as a temporary correction before another leg of selling, but our main target right now is the 26.08, which is the lowest point of 2016. Brent oil, similar story. I'm not going to spend too much time on this one. Again, let me just get rid of all the lines here. So of course, we're still trading below this this downside resistance line taken from the high of this 8th of January. We did get a test of this little area right here this morning, the 31.30 zone. We are also looking at the lowest point of 2016, which is roughly around the 27.13 zone. In a way, excuse me guys, in a way this could continue drifting lower, especially if it falls again below its this morning's low near that 31.30 zone. But we do have another interesting level here, which is the low of the lowest point of February, if I'm not mistaken. Yes, that is correct. The lowest point of February 2016, around the 29.95 zone. A nice good drop below this, then yep, could open the path towards that lowest point of 2016. But again, for now, it's a very tricky market, and yes, don't get me wrong, at some point we may see a bit of a correction. Now, in order to consider maybe some upside, again, we'll take that this high here, the high of the 29th of January 2016, and that's roughly around this 36.1415 zone. A nice good push above this could in a way lead towards a bit of a larger correction to the upside up until this downside resistance line, because again, as long as we remain below this downside line, anything could still be seen as a temporary correction before another leg of selling. Bitcoin. Now, Bitcoin, of course, sold off together with everything else. Now, this one, of course, it's a tricky one here because, well, here basically it's very difficult to, let's say, evaluate this one. And but how we could look at this on this one is, of course, from the technical side. Now, on last week I talked about this one, and basically what I was saying that if it continues to trade above this upside support line, we will remain maybe somewhat positive, but only up until this downside line. So in other words, we will be waiting for a clear breakthrough one of these levels. Now, what I was also saying that even if we see a drop below this upside line, we would still be we would ideally like to see a drop below the 8,400 level, which is the at that point was the lowest point of March. You can see that the crypto fell further south. It tested our other target, the lowest point of the low of the 24th of January, near the 8,216-17 zone, and it continued to drift further south. Tested the low of the 12th of January near the 7,963 territory, and in a way it continued to drift further south and tested the low of the 10th of January, which was around, or actually, should say, fell very close to testing that 7,671 zone, which is the low of the 10th of January, from which you can see that it can rebounded here. Of course, this is a nice healthy correction, but to be honest, for now, what we're going to do here is, of course, we're going to keep an eye on this low of the 10th of January near the 7,671 zone. We need to see a drop below this before considering further declines, because at this point in time, I mean, it could recover here. It could even recover a little bit more. It could retrace maybe even back towards this 8,400 zone. So that's why it's a little bit of a difficult one. So ideally, we would prefer to see a drop below the 7,671 zone and then aim for lower levels. Again, for now, guys, be very careful, be very cautious. If it climbs back above the 8,400 territory here, then yes, we will aim for a larger correction, but only up until this downside resistance line taken from the high of the 19th of February. Of course, the commodity-linked currencies like Australian dollar got hit as well. And as you can see, last week I talked about this idea here where we could see a push above the 0.6639 zone, and then, yep, we could aim for higher levels. As you can see, the pair didn't quite actually manage to stay above the 0.6639 level, and today, this morning, it got hit heavily, and we saw the pair drifting and testing this little territory here, the at around 0.6307. Now, if we look at the maximum that is available on this chart here, you can see where we are now. We've basically reached areas last seen in January 2009. So basically these are the lows of January and February. We're not far from there, guys. So yep, for now, keep your eyes on those. So in a way, what we're gonna do here is we're gonna aim for, if it continues to slide further south, we will then aim for the lowest point of March of 2009, and that's roughly around the 0.6281 zone. Below that, we do have the lowest point of February 2009, which is around, and let me just quickly check this, the 0.6249 zone. So basically, those are the main targets for now. Let me just jump back into a daily chart. There we go. Let's correct this one. There we go. So this is a daily chart, and yep, guys, for now you can see that it heavily retraced back down, but in a way, if it starts sliding back below the 0.65 mark, these levels here could come back into play. Don't get me wrong, if this was enough downside for this pair, what we're going to do here is now we're going to keep an eye on the high of last week near the 0.6657 zone, and a nice good pop above this could, yep, open the path towards higher levels. For now, again, we're going to remain neutral. If we see a drop back below the 0.6506 zone somewhere around here, then yes, we will aim for a little bit of more downside. But if it suddenly, let's say, recovers here and pushes back above the 0.6657 zone, then yes, more upside could be possible. USDJPY, also another one interesting pair, which took a dive, of course, due to the Japanese yen being under a lot of buying interest. I mean, as a safe haven, but don't get me wrong, we've managed to reach the area of support here near the 101.58 zone. So as you can see, it was quite a decent drop here from this morning. But at some point here we may see a bit of a correction here to the upside. You can see that we are trading below a very steep downside resistance line here. So taken from the high of February, sorry, and at some point, yes, we may see a bit of a correction here back to the upside, but only up until this downside line. For those who are more on the cautious side, you could just wait for a drop below the 101.58 zone and then aim for further declines. Now, the further declines here, one of the levels that we're going to consider here, of course, is the low of, let me just put this one on the chart very quickly. There we go. So the low of November 2016, and that's roughly around the 101.20 territory. So that's approximately around there. So yep, could be a good potential target, but if that is not enough for the bears, then the psychological 100 level could start coming into play. But again, for now, but we'll remain very careful and cautious. If this downside line breaks, this is where we will start considering maybe higher levels again. But again, for now, any kind of pullback could be seen as a temporary correction. USDCAD, also similar story here. And now this, of course, the Canadian dollar got hit here heavily. And last week I was talking about this high, the highest point of February near the 1.3465 zone, because what I was saying that if we get a push above that, then yes, we will aim for the 1.3482-83 zone, which is the high of the 24th of May 2019. But as you can see, we had a even bigger acceleration here. So in a way, the pair managed to reach this area here, the 1.3761 territory. Now, again, for now, how we could play this one out is if we see a drop back below this this high, the highest point of May 2019, which is around the 1.3565 zone. If we see a drop back below this, then yes, we will aim for a bit of a correction here up until this upside support line taken from the low of the 7th of January. But if it remains above this, then yep, more upside could be possible, at least towards this morning's high near the 1.3761. And finally, euro dollar. So this continues to accelerate. This one is very difficult, of course. So look at this beautiful up move here, and the pair right now is balancing around this high, the high of the 20th of March 2019, and that's roughly around the 1.1448 territory. So it's currently getting a hold up here. This morning the pair managed to reach the area around not far from the psychological 115 zone, and 1.1496, that's what it managed to reach this morning. Again, don't get me wrong, it could continue pushing higher given the situation right now. Some levels to consider here are, of course, the high of the 30th of January 2019. That's the 1.1514 territory, or it could continue traveling further north towards the highest point of January 2019, or in other words, the highest point of 2019, and that's roughly around the 1.1570 zone. So again, that's a very good target to reach. For now, everything's kind of leaning towards that, but again, don't get me wrong, at some point we could be seeing here a bit of a correction. Now, in terms of the correction, well, I mean, it could drift a little bit lower here if it drifts down but fails to drop below the the high of last week near the 1.1355 zone, then yes, we could see another round of buying. If it starts falling below this, well, this could lead towards a bit of a larger correction, which, to be honest, is right now already awaited. Okay, guys, so I hope this helps. I'm really happy that you managed to join in to this video, and thank you very much for your time. If you want to join me later on at my Traders Tea Time, as always, 14:15 GMT, we'll have a look at some of these instruments just to see how everything played out during the day, and yep, we'll have a look at some new ones. And like I said, guys, today, be very careful, be very cautious, don't overtrade, given the kind of the situation right now around the markets. Be very careful. If you can minimize your presence in the market, in the trade, then that would be even better. So guys, like I said, have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.